Brought to you by Motilal Oswal AMC.
Hello and welcome to Money, 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 your weekly personal finance date with me, Surabhi Upadhyay. Breathtaking, phenomenal, astounding. The equity market rally we've seen over the last couple of months has been all of that and more. Now, with the Sensex soaring above 30,000, the Nifty kissing the 9,500 mark, is it still safe to enter this market? What are the funds that you can invest in, and which are the ones that you perhaps need to avoid? Over the next 30 minutes, we're going to be answering all of those questions with our experts, and we'll actually take your queries live, so you can still reach out to us on Twitter. Joining us on the show today to answer your questions, Feroze Azeez, Deputy CEO at Anand Rathi Private Wealth, as well as Ashish Shankar, who's the Head of Investment Advisory at Motilal Oswal Private Wealth. Gentlemen, thanks for joining in. Good to have you here. Twitter has been buzzing and our Facebook page has been buzzing, as of the email queries, because everybody is wondering, it's a great rally, but, if I haven't entered so far, should I come in? If I'm investing in mutual funds, am I entirely safe? Or should I be, redeeming some of that and taking some of the money off the table as well? Your first thoughts, Feroze?
See, I think this is a classic dilemma of an investor. When it goes up too much, then he wants to book his profits. If he's not entered, he's regretting and he's thinking whether it's a good time to enter or not. Before you take up this decision, the most important point to do is to find relative measures of where we are today, right? Absolute numbers actually don't make too much sense. If you look at the peak of the market, 9,500 on Nifty, which is cost today, that's a very good number. But I think if you measure valuations of the market in two forms, which is price to book, we are close to the averages, and in price to earning, which are the two simple methods to see whether you're relatively cheaper or expensive, we are close to averages, and on the price to earning multiple, we are little over averages. So net, in my opinion, I think there's so much more rally left, because if you look at bull runs, last 10 years have been a bear run. If you look at bull runs, the last bull runs actually moved the indices from X to 7 times the X. I don't think that kind of bull run has still been seen. So always bull run is met with skepticism. I think that's the phase we are in.
Okay. Ashish, of course, mutual funds have been getting in record flows. They've been deploying a record amount of money in the market. Are you satisfied with the performance that you've seen from some of your favorite funds, the funds that you actively you advise your investors to invest in?
Yes, absolutely. I mean, if you look at some of the equity funds, they've done an amazing job. I mean, if you look at last 5 years, 10 years, 15 years track records of most of these investment managers, I mean, they've done almost 4 to 5% alpha over the indices. So they've done extremely well for investors. And just to dwell a little bit upon, the valuation question, I think the age-old fundamentals of investing in equity don't go away. If you're investing in equity for the long run, I think it doesn't matter at what time you get in. I mean, I think right now we are feeling the euphoria because if you go back 3 months, I think the sentiment was very poor and people didn't want to put in money. And markets have had a phenomenal rally. But like Feroze said, I think if you look at valuations in entirety, not just the PE multiple, which is most commonly tracked, I think markets are still reasonably valued.
Okay, gentlemen, let's get started because we are trying to help all our viewers here with the questions and they're already coming in. So this is a query that's come in from Twitter. It is from Aditya Badami. He's a resident of Bengaluru. He's written in and he wants to know whether this is a good time to be starting out an SIP in ELSS, in an equity-linked savings schemes. Feroze, I already know your answer. But I think if you can be a little more specific and also, help people out with respect to the kind of schemes that you think are performing well.
See, I think an ELSS scheme is a good start point anytime. From a taxation perspective, most people, unlike Aditya, who's thinking to invest in the beginning of the financial year, try to do this in the fag end of the financial year, which is actually not a very stupid, very prudent way to actually manage your money. It's very good, Aditya, to start his systematic investment plan in an ELSS, equity-linked savings schemes, which actually has a lock-in. So gives you a long-term perspective. Any short-term corrections actually psychologically don't impact you because 3 years your money is locked in any which way. So start it out, and I think if you choose a very good fund which has a potential to save you any falls in the long run, like an Access long-term equity fund, which is on the ELSS category, which I think will be a very good strategy. And since you're investing on a monthly basis, also getting a tax benefit, then it gives you a staggered entry, and then at the end of it, you claim a tax benefit. So it's a good strategy, Aditya, and I think every one of us should actually follow it.
Yeah, that's one good thing about ATC. At least it makes people start some incremental investment in equity funds. But Ashish, your favorite tax-saving ELSS fund?
So I like both the Franklin India Tax Fund and as well as the ICICI Approved Tax Plan. I mean, both these have been very, very consistent in their approach, and they've also been generating consistent returns. And it's always a good idea to start early. So if you do an SIP throughout the year, you get a nice average rather than wondering at the end of the year you need to save tax and putting in all the money at that point in time.
Okay. The next question is also from Twitter. This is from Hari Shankar. Now his query is an ELSS fund that invests in small cap and mid cap companies. So he seems to have a slightly higher risk profile, yeah, that's pretty much what he's asking. So now we're talking mid caps and small caps. And I know a lot of people have been talking about the DSP BlackRock mid cap micro cap fund, which has, I think, been pretty much a sort of a phenomenal fund. Is that something that would be on your radar? Is there anything else, Feroze, that you'd advise?
See, I think mid cap and small cap is a very large universe. I think there is a general feeling that mid caps and small caps have rallied. But since they are not as well researched and there's a longer tail to it, a fund manager always has a potential to pick up those non-rallied high growth companies in that space. So the fund manager's capability is best tested in that segment, because on the large cap side, you're ending up focusing on the indices stocks and you're not able to generate alpha as much as you can. So is mid cap or large cap? And large cap, which would I choose? I would choose the mid and small cap segment to exploit the fund manager's capability to my advantage to generate more returns than the market itself. So now coming to the ELSS scheme, which actually plays in that, Reliance Tax Saver is one scheme which actually has a larger exposure to the smaller companies. I think if somebody wants to participate in that, especially when you have a long-term opinion on it, I think that will be a good fund. And lastly, Surabhi, DSP Microcap, I think it has done a fair degree of justice to investors' money there because it invests in small stocks. I think Nagnath, who's the CIO, has always been one person who does bottom-up stock picking, and he has done wonderfully well. I think there is sustained performance yet in that fund.
42% returns on DSP BlackRock Microcap over the last 3-year period. I think it's beaten a lot of its peers in its group, right?
Absolutely. It's done fabulously well. And, Nagnath is, of course, a great guy. Even the fund manager who actually manages the fund, Vineet Sambre, has had a stellar track record. So, I mean, that's a fund which even I would pick. And again, I concur with Feroze on Reliance Tax Saver. I think even that fund house has a fantastic track record of identifying companies early and investing in them.
Okay, well, you have both the experts agreeing on a couple of funds, so you get double thumbs up on some of these names. And we've got our first caller joining in now, Rohit Khandelwal. Hi, Rohit.
Hi.
Tell us, I believe you're a professional, you're from the city of Pune. What's your question?
So I was looking for a large cap fund for a horizon of 7 to 8 years. I already have a couple of funds with me. So if you can just suggest me a large cap fund, I want to do an SIP for 3,000 to 4,000 rupees.
Okay, a large cap fund. What would be your favorite?
See, I think the large cap segment, you have to be a little more picky today because the liquidity rally has significantly moved the valuations up, and because they have a larger basis, the company's growth could be actually hampered. So choosing a fund which is a little more concentrated, but a fund which has not done too well but has a better future prospect would be a Reliance Vision fund, which was the flavors of the 90s and the early 2000s and had gone out of flavor. In my opinion, that's poised for a better performance in the future. If you look at the rear view mirror, I don't think it has done as well. So Reliance Vision, a concentrated portfolio, I think that would be a very good large cap fund. In my opinion, they have more defensives and they have a 20% tactical call. So Reliance Vision would be my choice for his SIP.
Would you classify this as a slightly higher risk fund? I mean, past performance is by no means any sort of measure of the future, either good or bad. We know that. But since it's not had a great track record, is it for the slightly stronger-hearted investors, would you say?
See, actually, no, on the contrary. There's a method to measure the fund's risk, which is called the down capture ratio, which captures how much of the fall does the fund capture. On that count, which measures the risk largely, this fund has fared very well. On the upside, on the return, the up capture ratio, which tells you how well has it been able to capture the upside, it has been not so good, but I think the future perspective is good. To answer your question, is it on the higher risk side? No, on the contrary, it has defensive stocks, but it is marginally concentrated. In the large cap category, you can definitely play a theme which is a little concentrated.
Okay, all right. We're going to take a quick break on that note, but your questions and queries will get answered on the other side of the break as well, so don't go away. Welcome back here with Money, 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 and this is the edition of the show where you get to know whether you're the right mutual funds or not. Sagnik Banerjee, who's 22 years old and is joining us on the line with a question. Sagnik, welcome to Money, Money, Money. How can we help you?
Good evening, ma'am. Good evening, sir.
Good evening. Tell us.
मैम एक्चुअली 6,000 की मैं SIP स्टार्ट करना चाहता हूँ न्यू और साथ में लमसम 2 लाख रुपए इन्वेस्ट करना चाहता हूँ अभी और हर साल में 5 लाख लमसम अमाउंट इन्वेस्ट करना चाहता हूँ.
ओके तो आप एवरी ईयर 5 लाख लमसम डालना चाहते हैं और अभी एट दिस टाइम 2 लाख डालना चाहते हैं.
हाँ और SIP स्टार्ट करना चाहता हूँ 6,000 पर मंथ की.
6,000 per month. You're also looking at doing an SIP. ठीक है, आपको जल्दी से views देते हैं. First and foremost, gentlemen, the question is whether this is the time to put in that 2 lakh lump sum or not, or whether he needs to stagger it out. And he's 22. He's looking at building a sizable corpus over the next couple of years. So, Feroze, fund options.
I think that's very good that the age of 22 he's thinking of retirement. That's like being a visionary. I think it's commendable, Sagnik. Or from a fund choice perspective, when you're starting out, to answer the first question, आपको पूरे पैसे एक साथ ही डालने चाहिए क्योंकि आपके पास वक्त बहुत है इन्वेस्टमेंट को वक्त देने के लिए क्योंकि रिटायरमेंट इज अ लॉन्ग टर्म गोल और जो भी मार्केट की उतार चढ़ाव से आपको ज़्यादा कुछ फर्क नहीं पड़ेगा लॉन्ग टर्म ऑब्जेक्टिव के लिए. सो लमसम पैसे अभी भी डाल सकते हैं आप. कोई एतराज़ नहीं होना चाहिए इस लेवल पे डालने के लिए. और फंड चॉइसेस I think there are 3 funds you should choose. IDFC Classic Equity, जो एक अच्छा स्कीम रहेगा फ्यूचर पर्सपेक्टिव के हिसाब से. कोटक 50 दो लार्ज कैप स्कीम्स और तीसरा SBI मैग्नम मिड कैप. ये 3 स्कीम्स की अगर आप कॉम्बिनेशन लेंगे तो आपके पास 150 से 200 स्टॉक्स आपके पोर्टफोलियो में शामिल हो जाएंगे. तो आपको जो रिस्क मिटिगेशन की जरूरत है वो ऑटोमेटिकली मिलेगी और इसको लॉन्ग टर्म होल्ड करेंगे तो मार्केट से अच्छी खासी रिटर्न और मार्केट से भी ज्यादा ये फंड्स अल्फा जनरेट करने की क्षमता रखते हैं.
Okay, Ashish, any specific funds that you would advise our friend here? And also, I mean, he's also looking at investing 5 lakhs lump sum every year. Right. So, is that the way you would advise him?
So, again, I'd like to congratulate him for starting early and more importantly, having a target in mind, right? I would like to keep it simple. I mean, if you take 3 multi-cap funds and invest in them regularly, I think he'll reach his target. Mathematically, if he puts in 6,000 rupees every month, and if you take the base return of equity of 17%, he should get there in 30 years. And since he's investing lump sum as well every year, I think he should get there in about 18-20 years. So the 3 funds I would recommend are Franklin High Growth Companies Fund, the Motilal Oswal F35 fund and the ICICI Prudential Value Discovery Fund. I think if he invests regularly in these 3 funds, he's on his way to retire in the mid-40s.
Okay, Franklin High Growth, ICICI Prudential Value Discovery and Motilal Oswal Focus Multicap 35. So some more options there for you. Well, the next we have is an email. This is from Supriya Nandi. And her query is that she's already invested in a couple of funds. She wants the experts to quickly vet them. Tata Infrastructure Fund, Sundaram Select Focus, HDFC MIP Long-Term Plan, and I think Bank of India AXA Equity Debt Rebalancer Fund. So she wants to know if there's any need to change the portfolio around or whether these funds look right. Ashish, are you happy with the choice?
So one look at these funds and it seems like a pretty random selection, to be very honest, right? I mean, you have a thematic, you have a mid-cap fund and you have a debt fund and an MIP. So I'm not sure what was the thought which was put behind constructing this portfolio. I like the Sundaram Select Mid-Cap Fund in the mid-cap space, right? The other funds I'm not too sure, because if she's investing for the long run, I would feel that it's better to go with, multi-cap funds and keep it simple rather than trying to, make the portfolio too complicated.
Okay, Feroze, do you have a thought on any of the funds that she's spoken
I think the Tata Infrastructure I would exit. Like Ashish said, Sundaram is a good fund. Sundaram Select Mid Cap, you can stay put. So you need to have exposures to the large asset management companies, so you can swap. Except the Sundaram, like Ashish said, the other 3 require a swap, and you should ideally swap it to Kotak 50 on the large cap category. You should swap it to IDFC Classic Equity, and then lastly, you can, if you really are keen to play a theme to make it more interesting, then definitely you can look at an SBI Pharma fund. Pharma over the last 1 year has had a dent in performance, but I think Pharma that there was headwinds with respect to regulations from the US, but I think that's behind us, and then you will have some more money to be made there.
That's a really interesting choice. I mean, the Pharma fund. In fact, we'll talk more about our guests' own top fund picks in just a bit, but we have time for one more query. I think we have a caller on the line, Mr. Roopchand, who is a resident of Mumbai. Hi, sir.
Hi.
Yes, what's your question?
I wanted to ask you about the HDFC Prudence Fund. Earlier it used to be classified as a 5-star fund, but recently it has been degraded to a 3-star fund. I wanted to invest a lump sum in that and for a monthly dividend option. Is it a safe bet, or would you suggest something else for investing in a lump sum at the current stage of the market?
Just very quickly, for our guests' understanding, your overall portfolio, what's the mix between debt and equity? And if you could just share your age or your investment goal with us as well.
I am 59. I am basically retired, and I have mostly all my money is in fixed income, like tax-free bonds and fixed deposits. There is a very little exposure to equity right now. So I'm just taking baby steps right now.
Okay, all right. So great to hear that. Ashish, do you want to comment on HDFC Prudence and the overall approach looking at his profile?
So HDFC Prudent is a great fund. In fact, it's one of the longest standing balance funds in the country. It's run by one of the most successful fund managers. So there is no reason for him to change. I mean, these ratings keep changing, and there is a lot of hindsight, in the rating business. So I would stick to the fund. But one thing he has to understand is, unlike a tax-free bond, in a mutual fund, when he gets dividend, it is coming out of the fund. So even if a balance fund does about 12 to 14% per annum in the long run, and he's taking out 1% dividend from the fund, it's essentially going out of his return. He may not make too much capital appreciation. So if he has that understanding, I think it's a good start to get into equities through a balance fund. And once he's comfortable, then he can look at, maybe some other funds as well.
Feroze, your advice to people who have a similar profile, 50-50 plus, and are more debt inclined, looking at the market and the way it is, should they be looking at a bit of a higher equity exposure, or right now you wouldn't be too comfortable making that switch?
See, in my opinion, I think balanced funds are a sit on the fence kind of an approach. If a person is doing an asset allocation and has a large portion of his money in debt, then if he's carving out some portion for equity, then he needs to be wholehearted and then go on the equity path without choosing a balanced fund. That would be my opinion. Because if you have anyways carved out a very small portion, because a large portion of yours is anyways fixed income, the risk on the overall portfolio is going to be mitigated by your asset allocation. Once you've got into a mutual fund, go the right way and buy yourself large cap and mid cap, the conventional ones, and balanced funds are best kept out, because you've already done your asset allocation, because you have a larger corpus. If a person only has 2,000 rupees a month to invest and he does not want to split across two funds, then a balanced fund would do the trick for him. From his context perspective, his contemporary situation, he should ideally choose a large cap and a mid cap fund and have 85% or 90%, which he anyways does on the debt side.
Okay, all right. On that note, we're going to take another quick break. On the other side, what fund is right for you? We've got two experts in the house. They will give us their best picks. We'll be right back after this break. Welcome back here with Money, 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 and this is a special edition because we're trying to find out, as this market keeps soaring higher and higher, how do you participate in the rally, which are the kind of right mutual funds that will help you make money. So we've got both our guests to actually list out a couple of interesting funds for us. Ashish, let's start with some of the large cap picks that you have, a couple of interesting funds that you like, and why.
Yeah, so my top large cap picks would be the ICICI Focus Blue Chip Fund. It's again been a very, very consistent performer, and it has a slight contrarian streak in the sense that they tend to pick out stocks which are a little out of favor. The second fund that I would recommend is the Kotak Select Focus, especially for long-term investors. This is a fund which goes up to 30-35% in mid caps. So if you have a long-term orientation, then this is a good fund to invest into. The other fund is a young fund, which is the Motilal Oswal F25 fund. It's 500 crores in size, but it has an extremely good portfolio and comes from a fund house which has a stellar track record. So these would be my three top recommendations in the large cap space.
Okay. Quick question, Feroze. Of course, I'm going to ask you about your large cap picks as well. And along with that, large cap actively managed fund versus an index ETF.
See, I think that's a very good question. I think little has been spoken about how much extra return have the fund manager been able to generate. The industry has started in 1993 from a private sector mutual fund perspective. If you see how it is performed, even on the large cap category, I think a 6-7% extra return has been generated. So if anybody has got a 3-year time frame, even if the markets fell by about 18-20% from a start point, he ends up not losing capital. That's a large risk cushion being created by active management. Unlike in the US, for example, an emerged market, 90% of the fund managers are not able to beat the index. In India, 85 to 90% are able to beat the index.
Smarter fund managers here.
Yeah, maybe. But the environment is conducive enough for the next few years to be able to have opportunity to be able to outperform the index. So I think it's a good strategy to mitigate the risk. 3-year time frames, if the market is down 20, you don't lose capital. That's a risk cushion which is automatically being created for a mutual fund investor.
Okay, now we are very short on time. So, gentlemen, very quickly, if someone is looking to add more alpha to their portfolio, get a little aggressive, then Ashish, between the multi-cap and the mid-cap, you mentioned some mid-cap ideas, the top 1 or 2 funds beyond large caps that you'd add to the portfolio?
So, to be honest, at this point in time, I would add 2 multi-cap strategies. I have mentioned 3 funds that I like, the Value Discovery, the Motilal Oswal F35 and the High Growth Companies Fund. Reason being, although mid and small caps make money in the long run and they create a lot of wealth, I think if you see the run-up over the last 3 years, 5 years, even over the last 1 year, I think valuations look quite rich and earnings need to catch up in that space. So I would be wary of, putting big money right now into mid and small caps. I would rather stagger money into that category, but I would be more comfortable investing in the multi-cap space.
Okay, and Feroze, quick last word with you, because you are talking about going for funds which haven't done so well in the past, but have potential to perform better in the future. So what would be your top choice there, and any caveats or any risk mitigation factors that we need to keep in mind?
See, I think like you rightly said, if the rear view mirror doesn't look good, because they are cyclical in nature, if you took good funds, underperformed ones. So in the large cap category, Reliance 50, which is trying to play an economic theme, which is related to the contemporary situation, then you will do very well. The GST, which I think over the next 3 years will shape up some funds. So Reliance Vision, SBI Magnum mid-cap fund will be the 2 from a large cap and a mid-cap perspective. And then if you want to add another large cap, a Kotak 50 is very well poised for a domestic recovery. From an economic standpoint, and that will make reasonable good monies for the client over the next 3-year period.
Okay, all right, gentlemen, we're completely out of time. Thank you so much for joining in and taking in all the viewer questions. Ashish, thanks to you as well. That's it on Money, Money, Money for this week. But of course, your feedback, comments, queries, welcome as always. We'll see you again next week.